Hey guys, welcome to the Silver Report. Here we are. It's Wednesday, February 22nd, 2017, and let's get right into some of the economic factors that will be playing a part in the price of precious metals. We do have some big news brewing under the surface. And so what we're seeing, instead of piling into the asset of silver, it's offered the largest gain among 22 raw materials on the commodity index this year. The ETF investors are retreating. We see that iShares Silver Trust, the biggest ETF backed by the metal, it's poised for a fifth straight monthly outflow. So for 5 months, they've been flowing out of ETFs for silver. And this is a trend not seen since the fund first listed in 2006. Holdings in all silver-backed ETFs have shrank by 6.2 million ounces and are near the lowest in several months. You might think, oh, that's bad news, right? And so what it's showing is some of the greatest news for silver investment that there could be. Number one, silver is surging. So there's a massive demand for safe haven assets and bets that industrial use will rise at a time of tightening mine supply, while investors in commodity ETFs have shied away from the metal in favor of gold. So hedge funds are reaping the gains. And we saw recently in a lot of the economic movements going on about hedge funds being pulled out of their normal holdings and moving into gold and moving into silver. Money managers built their silver net long positions every week this year, taking holdings to the highest since September. Buying of mining company ETFs, including pure funds, they've also benefited. So the world right now, number one, that the ETFs are not increasing is so important just because the physical market is showing strength. That is why it does not react on the same level when the Federal Reserve comes out and makes their threats of interest rate hikes. That's why we don't see any jumps down. We don't see silver retreating, despite Janet Yellen's best attempt to be able to beat it down once again. What we see is the price on a steady climb upward. And so, why are investors leaving the ETFs? And really, it goes to really reveal some of their tactics behind the scenes in their manipulation of silver prices, because they use the futures market. They use the ETFs to be able to manipulate the price of silver. And so they've been trying to smash down the price. And yet silver, despite having a flood of money moving out of ETFs, has continued to gain, continued to rise. This is a good year for silver. That's a quote from Marianne Montagne, a portfolio manager at Gradient Investment LLC, and it added the metal to its endowment portfolio in January. So what we're seeing now is constricted supply. We're seeing increased demand. That's having an impact on prices. And so investors, they favor gold now. It's more heavily traded than silver, making it more liquid when it comes to paper shares. Silver futures have climbed 13% this year. And the more expensive gold, it rallied. And so we have seen boosted demand for precious metals as a store of value. There's anxiety over electoral candidates in the Netherlands, France, Germany, and they favor exiting the European Union. It's also increasing the appeal of the safe haven of gold and silver. It's adding to silver's tailwinds, and it's a sign of improving demand as China's economy has just gone over this massive credit increase. And their stock market right now is soaring. So output from mines was expected by CPM Group to fall in 2016 for the first time since 2011. Supply is declining at a time when demand is rising from industrial users. And that also includes makers of jewelry, along with solar panels and electronics. Pure Fund's Silver Mine ETF, which delivered the biggest return for a non-leveraged fund, among more than 1,700 U.S. listed ETFs, over the past 12 months saw its assets jump 58% this year. The fund's price soared about 122% over the past year. It was helped by a surge in its biggest holdings, Pan American Silver, First Majestic Silver, and Core Mining. Until 2016, investors, they've been shunning silver and the companies that produce them. And prices we saw were falling 3 straight years and languishing in this dreadful bear market. And we see that mining companies' access to credit, it was also declining. It was forcing many to shut the ventures that were losing money, to be able to cut spending on exploration. It was leaving no room to ramp up output. And as demand picks up, we have all-time highs in demand. And so what we're seeing, silver is a very important industrial metal. It benefits from increased economic activity. We have Donald Trump. He's going out, he's discussing that we plan major infrastructure spending. We plan on a revitalization of manufacturing in the United States. He wants to bring automakers back, wants to have goods produced in the United States. And we also see China competing, having credit surges, trying to create some sort of fiscal stimulus. And so, on top of that, the ever-increasing desire of people to be disconnected from the U.S. dollar. The sentiments for the U.S. dollar has never been this high. The sentiments to leave the U.S. dollar has never been this high. The lack of trust and faith in the United States dollar. That's why we see worldwide investors are running from holding U.S. government bonds. They see this is a debt that can never be paid. No one wants to hold their money in the dollar anymore. We see when we look at Russia's gold acquisitions, they've been higher every year since the financial crisis began. This past year, they added over 1 million ounces in acquisitions of gold. We see countries around the world are moving into precious metals, and so there's not a favorability in the U.S. dollar. We've been seeing better financing opportunities for silver companies. All these, they really help the general health of small silver mining companies. We've seen that investors, they've poured $15.6 million into the fund this year, topping all its peers in the U.S., including those linked to fixed income, equities, and commodities. Last year's 130% rally was the ETF's first annual gain since its inception in 2012. So it doesn't make financial sense for these ETFs not to be in the silver market. In fact, they are missing out on one of the greatest performing commodity metal on the market right now. They've missed one of the largest moves in a small amount of time when those who remained in had substantial gains. So what we are seeing is an attempt to manipulate the price, and the reason that it's such great news for silver investors is the fact that it is unable to contain this soaring demand that is mounting. All right, thank you guys for joining me here on the Silver Report. If you like the content, be sure to subscribe, like the videos, share the videos, and I thank you guys all so much for stopping by, and as always, stay safe.